Ladies and gentlemen, good day and welcome to Ceinsys Tech Limited Q2FY25 earnings conference call hosted by Choice Equity Broking Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sushil Katiyal from Choice Equity Broking Private Limited. Thank you and over to you, sir.
Yeah, thank you, Shiv. Good morning, good evening, everyone, and a very warm welcome to all of you. On behalf of Choice Equity Broking, I would like to extend a warm welcome to the Q2 FY25 post-result conference call of Ceinsys Tech Limited. I would like to take this opportunity to welcome the senior management team joining us on the call. Today, we are pleased to have with us Mr. Kaushik Khona, Managing Director of India Operations, and Mr. Prashant Kamath, CEO, Whole-Time Director, and Vice Chairman. Before we proceed, I would like to remind all the participants to please refer to the safe harbor statement in the presentation. I now hand over the call to Mr. Kaushik for the opening remarks. Thank you, and over to you, sir.
Thank you, and good evening, everyone. It's a pleasure to welcome you all to this earnings conference call for the second quarter of the financial year 2025. Let me first thank our host for today's con call with the Choice Equity Broking. Thank you. In the interest of some of the people who may be new to the company, let me first start by giving you a brief overview of the company, followed by the performance highlight for the quarter under review. Ceinsys Tech Limited is a leading technology solution provider in the IT-enabled sector. We are renowned for our expertise in geospatial engineering as well as other engineering services and solutions. We offer a broad range of geospatial intelligence services including data creation, data analytics, decision support systems, enterprise web solutions, and all related solution services. In the financial year 22, Ceinsys strategically expanded into mobility sector by acquiring Allegro Technologies, a specialized engineering service provider with a strong international presence. This acquisition allowed Ceinsys to enhance its capabilities into manufacturing technology solutions, covering the entire product development process and industrial automation for diverse sectors such as 2 and 3 wheelers, passenger cars, commercial vehicles, and off-highway equipment. Ceinsys serves prestigious global clientele that include large corporates, OEMs, asset management companies, and government bodies, highlighting its robust reputation in both the geospatial and manufacturing sectors. With offices in India, United States, United Kingdom, Germany, and now added with at Singapore, the company combines local expertise with a broad international reach. Additionally, Ceinsys is venturing into software product development and emerging technologies through a new vertical focused on the artificial intelligence and machine learning and embedded electronics. This vertical emphasizes advancement in metaverse, edtech, gaming, and mobility, reflecting the company's commitment to innovation and maintaining a competitive edge in a dynamic technological landscape. Now, let me provide some highlights of our financial and operational performance for the second quarter and the first half ended 30th September 24. For the quarter under review, our operational revenues grew by 54% year-on-year to 90 crores. EBITDA grew by 71% year-on-year to 17 crores, with an EBITDA margin of 18.67%. Net profit was at 12 crores, which represents a growth of around 149% year-on-year, and PAT margin stood at 13%. For the first half of this financial year, our operational revenues mounted to 164 crores, demonstrating a strong year-on-year growth of around 46%. EBITDA also saw a notable increase, rising by 42% year-on-year to 30 crores, with EBITDA margin standing at 18.3%. Additionally, our net profit surged by 82% year-on-year to 24 crores, with a PAT margin of 14.4%. The growth in both revenue and EBITDA margins was driven by the successful execution of value-added projects, which contributed to stronger margins, Additionally, our ongoing initiatives to improve operational efficiency have enabled us to handle large volumes more effectively, further boosting our performance. On the balance sheet front, we reduced our working capital cycle to 108 days, which is down from 190 days on 31st March 24 and 237 days on 31st March 2023. This consistent improvement reflects our ongoing efforts to optimize operational efficiency, reduce cost, and enhance cash flow management. Our total order book as on 30th September 24 stood at 1,210 crores, reflecting a robust demand across our core business segments, with geospatial and engineering services contributing to almost 76% of the total order book, while technology solutions make up the balance 24%. Some of the notable contracts which we have acquired during the quarter include two important contracts from the Maharashtra State Water and Sanitation Mission. The first is an IoT-based project worth rupees 206 crore, and the second is digital project monitoring system project valued to 60 crores. Additionally, we have been awarded the extension of third-party inspection project by the Uttar Pradesh State Water and Sanitation Mission, which is valued at rupees 196 crores. As you may also know that during the quarter we raised fresh equity and issued warrants worth rupees 235 crores during the quarter and raised 105 crores as a funds. These funds will be directed towards driving both organic and inorganic growth strategies, positioning us for sustained expansion and long-term value creation. This fundraise has put us in a strong cash position with a total cash surplus of 172 crores and a net operational cash surplus of 68 crores as on 30th September 24. It is important to note that our wholly owned subsidiary Allegro Technologies has been actively investing in the business development during the first half of the financial year, and around 6 crores has been invested for both organic and inorganic growth initiatives at the subsidiary level of Allegro Technologies. Additionally, we have made strategic investments to expand our abilities. In July 24, we have successfully acquired assets of a geospatial company in the US, which has a strong exposure to the telecom sector. This acquisition opens up new avenues for growth and strengthens our market position in key sectors. Moreover, we have started investing in data center capabilities, which will be a key enabler for our future growth, particularly in the rapid expanding digital infrastructure space. With this, I now open the floor for the questions and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Singh from ProInvestor. Please go ahead.
Audible, sir?
Yes,
hello. Am I audible, sir? Good evening, all, and thanks for the opportunity. Thanks for posting excellent set of numbers, sir. Two questions. As I'm going through the results and balance sheet, I saw growing cash equivalent to 206 crores. Further, we have increased our debt from 9 crore to 19 crore, and we have not paid any interest cost from past 2 quarters, and further paid extra 14 to 15% of taxes. Any specific reason, sir?
Prashantji, if I can take this.
Yeah, go ahead.
Yeah. So thanks, Vishalji, for your question. I understand you are referring to the balance sheet, which is part of the presentation. And in that presentation, if you look at the overall financial capital I would say the funds, the total cash which is as on 30th September 24 is 213 crores and the borrowing is 41 crores. This borrowing includes other financial liabilities which are consequential to the operations of the business, including the term loans, the loans which we had taken earlier and which has already been repaid now. this amount of financial liabilities are also in respect of certain accounting liabilities, which are not actual liabilities, but they are lease liabilities which are classified as borrowings, and therefore the total amount of net surplus is 171 crores. You have commented upon the finance cost. The total, if you look at the finance cost, it's hardly 5 million, which is 50 lakhs. This finance cost is mainly in relation to the bank charges which we pay to issue the bank guarantee as well as renewal of bank guarantee. There is no interest cost during this quarter because there is no net borrowing cost. There is no net borrowing. So I think if I can just clarify, the classification of borrowing is because of accounting standards. However, the total surplus cash which we have is 171 crores, of which the cash which we have raised because of the preferential allotment is 103 crores, and the operational cash surplus is 68 crores. So because there is operational cash surplus at the end of the quarter, at the end of 6 months, as well as on 31st March 2024 also, we had an operational cash surplus of 29 crores. Therefore, you don't see any borrowing cost. Whatever finance cost is there is in respect of the bank charges which we pay, which is, as I said, for bank guarantee issuance, renewal, or the renewal of limits for which they charge the bank charges. I hope I have clarified the question.
Thanks for clarifying, sir. And excellent EBITDA margin, sir. Are we going to sustain it? And further, you can guide us for top line for like another 2 to 3 years.
Prashantji?
Okay. Are these margins sustainable? My answer would be yes, but we are not going to putting our neck on the block to say it will match exactly to the every number. But these are the sustainable margins. This is not a aberration quarter, if that's the question. If you think this is flip in the pan or happening for the first time, or is that manageable continuity basis? Answer is definitely yes. Guidance, I think we said last call also, we don't want to give any forward-looking statements on our numbers. We believe based on the space in which we are and the initiatives the company has taken, we would see a robust growth. And I would leave it at that.
And just to supplement that, I think if you have seen the today's advertisement which has come into the Economic Times, quarter on quarter, the EBITDA margins have grown from 22.1% of quarter 2 of FY24. 22.1 has gone up to 23.6, and it is today we are talking 24.9. So I think they are growing and sustainably growing.
Thank you. What did you tell about that total order? Just repeat that again, sir. I was not able to listen to that.
So as I mentioned, we have total order book of around 1,210 crores, which is as on 30th September.
Thank you very much, sir, and good luck. Good luck for the future.
Thank you very much.
Thank you.
The next question is from the line of Garvit Goel from Invest Analytical Advisors. Please go ahead.
Hi, am I audible?
Yes, you are.
Good evening, sir, and congrats for a good set of numbers. I'm actually a bit new to the company, so can you please help me to understand what exactly we are doing in our geospatial segment and how we are different specifically from an ordinary EPC company, sir?
Prashantji?
I think let me try to address this in a short, and maybe you can add later.
Yeah.
So basically what we do in geospatial is, if you see current government of India focus or different state government focus, they are trying to digitize most of the utilities. Whether it is land records, whether it is water supply system, whether it is energy domain, whether it is property tax collection. So wherever there is a digital data associated and it has a longitude and latitude attached to that digital data, that's the space in which Ceinsys operates. How we are different from EPC, we typically don't get into the hardware side of the business. Typically, I wouldn't say it's zero, but we largely depend on the digital side of the world. That's the main differential.
So, who exactly are
Wait.
Yes, sir.
Sorry, in a nutshell, if I have to say, you should look at us as more like ITES and IT company segment. That's our majority revenue.
Got it, sir. Sir, then you mentioned we are particularly on the digital side. So is it like, for example, a company in a water treatment plant that is?
No. Water treatment plant would still be as a part of EPC. But where the upstream water flows, how the pipeline should be laid, where the best way to get the shortest path to draw those lines, all of that planning in the digital world, depending on physical coordinates and satellite imagery or the LiDAR taking data, is the work which we do on the computer.
Thank you. The next question is from the line of Praful. Please go ahead. Mr. Praful, Rai, your line has been unmuted. Please go ahead with your question. As there's no response, we'll move on to the next question. It's from the line of Shreya from Oaklane Capital. Please go ahead.
Good evening, sir. Am I audible?
Yeah, audible. Good evening.
Congratulations on the excellent set of numbers.
Can you please use your handset?
Yeah, sure. Am I audible now?
There is still a disturbance.
The current participant has been disconnected. We'll move on to the next question. It's from the line of Puneet Mittal from Fort Capital Advisors. Please go ahead.
Hi, congratulations for a good set of numbers. I have three questions. One is more of bookkeeping. There is something called unbilled receivables, in your balance sheet. Can you please explain that and whether these unbilled revenues are already factored in the revenues? Second, again, there is a line item called margin amount or escrow account of 37 crore on the cash flow statement. So if you can explain what is that. And third is there is 1% of issued capital granted to Mrs. Rashi and Mr. John. So it will be useful if you can give a little bit more background of these two individuals and what are the KPIs associated with this grant. Thank you.
So, Kaushik, if you can take the first two questions, I can address the third one.
Sure. So, unbilled revenue was your first question. Unbilled revenue is basically recognizing the amount of the work already carried out for which the invoice, the milestone to raise invoice has not been reached, but the effective work has been completed, and therefore, as per the accounting standard 103, the same amount is recognized, and that is accounted in the part of the income. So when you look at a turnover of 90 crore in this quarter, it includes the unbilled revenue, but the invoices raised and unbilled revenue will total up to the amount of that. And unbilled revenue will be like a WIP which gets adjusted. So opening WIP is removed and closing WIP is added. That is answer to your question number one. Question number two, you were talking about escrow account. I didn't understand from where you are looking at escrow account.
So if you look at the consolidated cash flow statement, In the investing activities, the last item is margin money slash money at escrow account of 37.75 crore.
So this amount is basically where we are, as per the amount which we have to receive, there is an amount which is already received, which is going to be utilized for the purpose of project ongoing, and that is already part of our cash balance.
Sorry, I didn't understand that. I want that to be received from whom?
From the customers. It is already received from the customers, and it is already part of the cash balance.
Okay. So then it should not probably be in the investing activity. It should more be in the operating activity. That's fine. That's all right.
Yeah. As regards the third question, Prashantji?
Yeah. So your third question was about, if I understood correctly, the third question was regarding this 1% of stock to John. Is that correct?
Yes, to John and Mrs. Rashi, I think 1% of issue capital.
Okay. So these are the individuals we have hired in US. Let me first give you a background and reason of John. That's where we started. So the John is the erstwhile CEO of the company which we acquired in this quarter, the assets of the company which we acquired, the geospatial company from Michigan. This is linked to his performance delivery in the 12 months period, and based on that, there are different slabs depending on what performance he achieves. He's going to get those stock options. Rashi Mehta is the finance VP we have hired in US, and her ESOPs will be linked to success of how we are able to identify and close acquisition transactions. So these are the two individuals, and these are the two specific purposes they are hired, and they will be getting stock options.
Understood. Thank you so much. And all the best. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer questions from all participants in the conference, please limit your questions to 2 per participant, as there are several people waiting for their turn. The next question is from the line of Guneet Singh from Countercycle PMS. Please go ahead.
Hi, sir. I would like to congratulate Mr. Prashant and the team for a great set of numbers. So, sir, we raised about 200 to 250 CR. I would like to understand, have we made some headway in terms of doing any inorganic acquisitions, inorganic growth? I mean, I would like to understand the management's point of view with regards to efforts in that direction. And I mean, can we expect something in FY25 in terms of any inorganic growth?
As I said, we already closed one transaction in, I think, August in United States, which is a company from Michigan, in geospatial. In terms of progress, if you are looking at, we are currently in active discussion with 3 companies, out of which one we are at a stage probably we would be able to give them non-binding term sheets before the end of this month. However, whether these acquisitions will close before FY25 will depend on many more additional factors like due diligence and how much time it takes for negotiations and all that stuff from the contractual side. So I won't be able to answer that question definitively, but the intent behind raise of fund was going after acquisitions actively, and the team is very much active and looking forward for all of them.
Perfect, sir. Thank you very much for addressing it. Great to hear that you're making progress in that direction. Sir, my second question would be, a standalone revenues are about 78 CR with 20 CR EBITDA, whereas our consolidated revenues are higher at 90 CR, but EBITDA is at 17 CR. So, I mean, I just would like to understand which of our subsidiaries is actually making losses currently. Is the US subsidiary not EBITDA positive, or, I mean, how is this translating from standalone to consolidated? Also, sir, in continuation to this, I would like to understand, generally, our Q4 is the strongest quarter because of payments coming in from the government sector. But now that we are diversifying and moving into different fields as well, so, I mean, should we expect this 90 CR kind of a run rate to continue, and the earlier seasonality in the revenues that we saw, the variations? I mean, should we expect the revenues to be more consistent quarterly? I mean, what should be your take on this?
So, Shanti, if I can just take the first part.
Yeah, go ahead.
So, your observation is correct, and thanks for your interest. The standalone top line is 78 crores and the consolidated top line is 90 crores. The EBITDA is slightly affected because I think we also had clarified that the subsidiaries have invested almost a sum of 6 crores towards the business development for organic and inorganic growth through subsidiaries. So I think if you consider that, and that has been expensed out in the profit and loss account. So that is the reason why you see a slight impact on the consolidated results when you compare the subsidiaries. If you make the adjustment for that 6 crore, I think it will show the improvement in the results in line with the standalone results as well.
All right, and in terms of you did answer in terms of the run rate. I mean, can we consider the revenue? Sure.
I'm coming to that. So on the investment, I would just like to add a couple of more points. This is not only business development. This is also related to whatever you heard in terms of M&A and all that, what we are planning and what the activities are happening. Because large part of this activity is happening in the US, the investment vehicle used is a subsidiary in the US. That's why when we consolidate, you see a different picture. But these investments are, you should look at it as a company, as a group. Therefore, segregating and saying that, okay, the other part of your question was, is subsidiary at EBITDA level is losing money? Answer is no. Subsidiaries are also healthy positive. If we correct for this adjustment of investment, our profit margins would be similar to past, probably a couple of percentage points better, whatever that number comes out. Okay. In terms of seasonality, I would still expect similar seasonality, if not exactly same, because as you heard, as of this quarter also, almost like 76% of our revenue is coming from geospatial and from government related business. Not directly government, but government related business. As a result, I would expect seasonality to continue for at least some more period of time. But the second part of your question is also correct. Because we are diversifying and because we are looking at other avenues and we have started looking at some success, that seasonality, if you see previous years, suddenly becoming double or something like that, I don't think that will happen. There will be seasonality, there will be Q4 better, but is it going to be the difference like last year? I have my own doubts.
All right, sir, got it. Thank you very much. I believe, that the team is doing a great job, and I wish you all the best.
Thank you. Thank you.
A gentle reminder to participants that you may limit your questions to one per participant, as there are several people waiting for their turn. The next question is from the line of Raj Saraf from ProInvestor. Please go ahead. Mr. Raj, your line has been unmuted. Please go ahead with your question.
Sir, am I audible?
Yes, you are.
Yes. So, we have an order book of 1210 crore, of which 76% constitute geospatial and engineering services. So, I'm not seeing sir, any growth when I compare this 64 crore execution and compare with the last year, sir. So, what is the problem, sir? We are not seeing any growth in execution rate, rather say, in geospatial and engineering services.
So I understand. Yeah, if I can just understand, what I understand is you are feeling that the execution pace has not improved. I think if you look at quarter-on-quarter turnovers and the performance, the last year same time we did a turnover of around 46 crore from Ceinsys on standalone basis, which has grown up to 78 crores. So I think there is a growth which is substantially more than 75%. As regards the turnover, so the orders which we have, we are not digressing from the timelines by which we have to perform, and therefore all the orders which are here with us, of which almost 400 crore orders have been received in the last fortnight of September. These orders will also be executed over a period of next 1 or 2 years based on the actual orders which the duration which they have been given. Coming down to execution part, the execution ability has increased quarter on quarter, and if we compare to what it was in 2022-23, we are right now at 3 times. And what it was in 23-24, we are almost double. So we don't have any question as regards the execution capability, as we are in line with the project requirements. I hope I answered your question.
So what I'm going through the presentation, sir, the operational revenue in geospatial and engineering services, if I compare Q2FY24 and Q2FY25, so it is 518 million in Q2FY24. And in Q2FY25 is 543 million, sir.
I'm sorry, I'm still not able to understand the question itself. Huh? Did you understand?
Sir, when I'm coming to the presentation, sir.
So let me clarify. This geospatial, what you are looking at 518 also includes the engineering services, which is basically the automobile part, which is part of the subsidiary company. If you club the two businesses together, because last year the classification was slightly different. The segment which we had classified in the till 31st March 2024, they were 3 different classes where it was not geospatial and engineering, it was a different classification. So therefore, the classification, if you look at the apple to apple, we are talking about 518 and 54, which is the technology solution. I would request you to look at the combined number, because the classification of the segment has been changed. And therefore, I would again request you to look at the figure that 518 plus 54 is a consolidated number of Q2 of FY24, which is coming to around 58 crores. Out of that 58 crores, 47 crore was of Ceinsys of the standalone basis. Out of 47 crore, 35 crore was geospatial. If you look at this quarter, the total turnover is almost around 90 crore, of which the subsidiary, which is Allegro, if we remove, Ceinsys turnover is 78 crore, of which geospatial turnover is around 62 crores. So from a 35 crore to 62 crore is a healthy growth as regards specific component of geospatial which you asked for. I think it's a matter of combining the two figures because the classification segment has changed last year.
Okay, sir. So it is made a confusion in our mind, sir, just because of the classification, sir. And sir, if you allow me to just ask a very important question, give you a update on, sir.
Mr. Raj?
Your voice is little not clear.
Sorry to interrupt, sir. Mr. Raj, please fall back in the question queue for further question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible?
Yes, you are.
Yep. So just my question relates more towards medium term to long term. I mean, in terms of our aspirations or the vision as such, I mean, if you have to see next 3 to 5 years, is there any aspirations to kind of have having achieved around 1,000 crores of revenue or any comment on around those lines would be very helpful. Yeah.
Prashantji?
As we said, we don't want to give forward-looking statement, but if you are asking me a vision in the long term, yes, that number is reachable.
That number is, and how many years we would see as a range, I mean, where we can possibly achieve such kind of revenue?
We could exceed that within 2 to 3 years, depending on our current order book.
Around in 2 to 3 years, 1,000 crores of revenue is achievable, right?
Yeah, that's the order book and it's a possibility, but I'm not going to comment on forward-looking statements of where we'll be and all that. But ballpark, those are the directions in which company is building itself.
Okay, and that is per annum we are talking about, right? I mean, not cumulative.
Yeah. No, per annum, yes.
Okay.
I know I wouldn't be talking 5-year cumulative revenue.
Yeah. Fair enough. Yeah, I think that would be from my side. All the very best to you. Thank you.
Thank you.
The next question is from the line of Shreya from Oaklane Capital Management. Please go ahead.
Good evening, sir. Am I audible?
Yes, you are. It's little sounding like echo, but yes, you can continue. We can hear you right now.
Could you just throw some light on how should we view the geospatial and energy services, engineering services, and the technological solutions which you have reclassified? So how should we expect it? And that would be the first part of the question, sir. So if you could answer that.
So if I can just attempt, Prashantji.
Yeah, good.
See, till last year, I would say till 2022-23, we had a substantial contribution from energy domain, and therefore it was appearing as a separate segment as per the segment accounting standard. As per the accounting standard, we have to have segments which contribute 10% or more as identifiable separate segment, and therefore, based on the advice, we revisited the segment classification. And that is how the geospatial and engineering services are part of one domain, one segment now, while technology solutions, which are not dependent on the specific geospatial segment, which are more related to the solutions which we do in-house by technological upgradation or by platform, by making the processes over the platform, solutions over the platform, is technology solutions. So that's how the two segments have been redefined.
So going forward, our focus would be more on technological solutions rather than geospatial because there has been a steady increase in that segment.
So I think geospatial and engineering services will remain, both of them, to be very frank, both of them are equally strong. If you look at the phase and the cycle at which we are, there are certain orders which we have on the technology solutions which will contribute substantially in the next 2 to 3 quarters based on the order book which we have and the plan of execution. So I think the segments have been defined based on the contribution which they are expected to provide over the reasonable next 3 to 4 quarters as we have seen. So it will be difficult to project what will be the percentage of geospatial engineering and our technologies as a part of total, but I think they both will be substantial.
So what is the progress on the data center?
So on data center, we have already started mobilizing the team. We have already had a few people. There is already some market research which is going on. We have market research happening at Singapore as well as at Bangalore. And I think we will shortly be coming out with a detailed business plan, which we can then present to the board.
Okay, so any revenue guidance, what are we looking at the market for the TAM? that segment?
As of now, I think it will be difficult for us to give you any specific revenue numbers as it being a forward-looking, but it being a new segment, I think it will take at least 1 or 2 years to become a reasonable big segment to account for.
Thank you very much.
Thank you.
The next question is from the line of Garvit Goyal from Invest Analytics Advisor. Please go ahead.
Hi. Thanks for the follow-up. My question is on the tax rate. In this quarter, the tax rate seems to be very high. So what is the reason for the same?
Very, very intelligent question. In fact, the tax rate is high only because we have received dividend from our JV company, which is not accounted as a EBITDA. What happens is that the JV company, we have 70% holding and 30% is with the JV partner. We don't account that as a part of our segment. Now, when the dividend is issued, we are taxed for that. On top of it, we are also accounting the share of profit for the particular quarter. So the dividend which is received is around 10.7 crores is also added, but for which there is no top line of that. And that is why you see the tax rate higher in this quarter. Because for that, the dividend received, we have to pay the tax, while for the normal accounting, current tax, it is only on the book profit which we are accounting for. So there will be an extra tax of almost 4 crores in this quarter because of this dividend income.
So how it is going to be for next quarter? Like, I think it is one-time kind of thing, right?
No, dividend is received every year. This time the dividend declared was higher, and it was received during the quarter of July to September. That's why we see the impact here. And earlier also the dividends have been declared, but the impact was lower, and therefore the percentage of tax was not felt. This time on a taxable income, the amount is around 10 to 10.7 or 11 crores, on which I have to pay around 4 crores. That is the extra income tax, which is accounted as a part of the current tax.
So where this amount is getting reflected in your income statement for this quarter? Like it is not
that goes as a part of our assets, adjustment to the assets, because it doesn't appear as a part of the income. What appears as a part of income is the quarterly share of profit. So every quarter, like this quarter, we received a share of profit of around 2.6 crore was accounted on an accrual basis. And during the year, that last year, that share of profit was around 12 to 13 crore, on which the dividend was received, and therefore there is a little duplication of the income on which tax is payable, but the income of 10 crore 76 lakh is not appearing in the income statement as it has already been accrued over the period earlier.
Got it, sir. Thank you very much, sir.
Thank you.
The next question is from the line of Prateek Chaudhary from Samarthya Capital. Please go ahead.
Hello.
Am I audible, sir?
Yes, you are little faint, but if you can be little nearer to the answer.
Just a minute, sir. Is it better now?
Yeah, it is better.
Yeah. So one on the acquisition that we have done in US, where on the geospatial side, where we will possibly be targeting the telecom sector over there. If you can maybe briefly tell us what is the scope and opportunity in that foray and how that specific use case and industry is evolving.
Prashantji?
Yeah, the short answer is difficult and long answer won't permit me on the call. So I'm going to try and give you the summary. The acquisition which we have done is a boutique company which helps these large telecom towers players to create the inventory by scanning their towers.
You said telecom towers?
I've been in telecom towers, yes.
Okay.
And they have been in business for like last 6-7 years, and they have big, I think US top 3 tower companies are their clients. So we see a potential for them for a serious growth, and that is why we have invested in them by acquiring their assets.
Okay. And this would be for mapping of all of the tower infrastructure or the future planning of all of the tower infrastructure which is to be put up or maybe replaced.
Yes. And also, this is one piece of the puzzle. Second piece is whatever is installed towers, most of these have been installed over historical period, and many of these large companies don't even have the inventory of what is there and what equipment and what replacement frequency and all of that. So scanning of all existing infrastructure, collecting that information, digitizing that, and supplying it.
Okay. And the last question, this for our geospatial business, both across the globe, what is the total orders that we have bid for which results are still awaited, bid pipeline or orders that we have bid for?
I don't know the exact number, but
rough range.
Roughly correct, it is about 400 to 500 here.
Yes, that's correct.
Yeah. It's in that ballpark. I don't know the exact number.
No, that's in the range. So I would not be able to give you the exact number, but it is in the range of 400 to 500 crores, for which we already bid.
And by the way, this is we probably have bidded a little bit more, but this is where we believe our winnability is higher. Let me put that caveat also. So our bidding might be a little bit more, but we believe our winnability from the bidding, whatever we have already bid, is somewhere between 400 and 500 additionally.
So 400, 500 is what you see with a very high chance of you getting the total of this order.
Yeah, now whether it is very high or moderate or high, I would say winnability is a rather better word than trying to put any probability number. We are optimistic about this. Let's put it that way.
Okay, because I think in some of your other calls you had mentioned some 1,500 crore or a 2,000 crore number also that.
Yes, so you are absolutely right. If our current is 1,200 and we are saying 500, we are adding up all that together. What we paid is consistent.
Yeah, I didn't get you, sir.
No. If you heard Kaushik's opening remark, our existing pipeline order book is 1,200 CR. And we are saying our winnability chances optimistically are another 500. So we are talking of total 1,700 pipeline.
Okay, understood. Okay.
So the numbers which we told you between 1,500 to 2,000 is where we will end up, is what I believe.
And this could happen by the end of this financial year itself, potentially.
Let's keep fingers crossed. We are working towards it. Let's hope all the stars gets aligned and we get to that point. Yes.
Sure, sir. All the best. Thank you, and I'll get back in the queue.
Thank you.
Thank you.
Thank you.
The next question is from the line of Debashish Neogi from HD Investment. Please go ahead.
Yeah. Am I audible?
Yes, you are.
Yeah. First, congratulations, sir, for a brilliant set of numbers and also the transparency with which you come up with the presentation on the concall. So thank you for that. So my question is that I've been an investor for quite some time and been following the company for long. I'm saying so from an outside-in perspective, it looks like because of the political connections we are winning these orders, but it is not that because our win rate is 90% plus, our attrition rate is only 1%. So which means we have competent and engaged employees, which is key to such sector. Now, my question to you, sir, is if you can elaborate, why our win rate is 90% plus? What exact right to win which we have, specifically in geospatial sector in India, in the government department? What is that edge which makes us very different from the others?
Okay. The answer needs to be a little bit elaborate.
Sorry, sir.
But I'll take time for it.
If you can give with an example, that will be very nice of you.
Yeah, that's what I'm saying. But I will take that time. Okay. So the first answer to that question is we have stopped going after buckshot approach by throwing 10 stones and see what hits. Instead of that, we have got into a mode of rifle shooting. So we are not bidding for whatever is available there in the market. Let's bid and see what we win. What we have started doing is go after the tenders where we have a serious competency and serious credentials. So that puts us apart from the rest of the competition when that bidding process starts and when we look at who is likely going to win. Because right now, if you know, no government contract can be won only on a price, L1 basis. There is a QCBC. You have to meet many more criteria. And if we have an approach of rifle shooting and looking after only our competency areas where we are competent, confident, and with experience, we go after them, obviously the winnability becomes very high. And that's the main reason why you see sudden change in the winnability and profile of the company winning more frequently the larger contracts.
And I think he rightly said that we have the competence where the people have helped to reach to this level. And with a very less than 1% attrition rate is something which we can be proud of.
Is the attrition rate still so low? Because this kind of attrition rate is unheard of, sir.
No, that's correct. It's good to hear that, and that's correct.
Okay, so sir, if we look at strategically, our core has been geospatial sector in India and more with government contracts, right? Then we wanted to extend the core because we are in the service or technology is linked to geospatial, so we wanted to extend the core. We acquired Allegro. So now if you look at purely from a strategically, we are operating. I'm putting my words. We are operating in geospatial in India in public sector, and ER&D more into automotive sector outside of India mainly. So my question to you is that is there real synergy in these two, and what is the if you split the revenue between government and private, what is the revenue contribution now, and what you see the revenue contribution will be in the next year? Percentage I'm talking about.
Okay, so before I come to revenue, let me add third vertical which you just missed. Right now, through the acquisition in US, our revenue from geospatial non-Indian government has also started trickling down. So that will also continue to increase. Right. So with all that, plus the acquisitions which we are planning, now let me come back and answer your question. Today, our revenue split up would be 76-24, 75-25, 74-26, in that range. So 75-25. Mm-hmm. Let's put it down here. Okay. Over a period of time, we are expecting it to go more of an international revenue. So there will be an interim milestone where we will probably hit 50-50, and over a period of time, we will build the company to get international revenue of the order of 75-80%, and government business and India revenue could be 20-30%. So that's the direction in which company is moving.
Brilliant, sir. So what you see, my last question, sir, what you see is the biggest, challenge for the company?
Sir, could you please fall back in the question queue for further questions?
Sure.
The next question is from the line of Rudresh Kalyani from Kalyani Private Business. Please go ahead.
Hello. Am I audible?
Yes, you are.
Yeah. Thanks for the good set of number. So I wanted to know the total pipeline for order.
So I think you missed it. We have
order. I know you talked about 1,700 crore. I'm not talking about that. I'm talking about the total order bid which you have bid till date.
So I think it will be not practical to provide you the total orders which we have bidded. What we can recap, we already have orders on hand which are to be executed or 1,210 crore. There are several orders, of which some of the orders which we are focusing right now are in the range of around 400 to 500 crore. So that's the numbers. We may be bidding more, but for that, I think that we always, in every quarter, we try to find out opportunities which suit our credentials and credibility. And that bidding process, or I would say shortlisting process, will be a continuing process every quarter.
Okay. And see, with the size of the company we have, don't we think we have spread too thin across the segments? We are talking about the metaverse, we are talking about the water pipeline, we are talking about the highways, etc., and in the transport vertical as well. So just want to know your thoughts.
Okay. So your observation is correct, but if you step back a little bit and think through the technology platform for all of this, that's a scanning and capturing of reality. That's our main core competency strength area. All what you said are the use cases of that competency, and that's why we are selecting those segments. So we are not moving away from our core competency. We are using our core competency for different use cases. That's the way to look at all what you just asked as a question.
But metaverse as well as the data center is entirely different domain altogether, right?
No. Metaverse still needs the reality capture data. We are not going to get into virtual reality fighting. Virtual reality, for gaming, you need a real world information which comes from scanning. We are going to build platforms for somebody else to use. Look at it from that perspective. There is a core competency remaining same.
Okay. Thank you. And finally, my last question is...
Yes, sir. Please go on.
Sorry. Just to complete, data center, as we mentioned last quarter also, is an adjacency which we are seriously exploring because we see there is a big market potential. So that's a different vertical we will create if we decide finally to spend energy, time, and go after it very seriously, because we see a big potential. But metaverse and all this is a scanning data and the same competence. Sorry.
Thank you. The next question is from the line of Ankit from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a great set of numbers, and thank you for taking my question. Sir, my question is in terms of this order book of 1,210 crore and bid pipeline. Can you comment as in which state contributes most to this? And given, I guess we won large order from Maharashtra, and given Maharashtra is entering election, so any slowdown or any risk we see on that front in the coming times?
So let me answer the question of what is the breakup. You are right to say that the order book has major constituents from Maharashtra, and one more major constituent is from Uttar Pradesh, where we have dominant presence as of now. We are building up presence in other states as well, and predominantly these two states are presently accounting for a higher number. The question is of election. Election is going to be over on 20th. It's a matter of small blip, while the execution of the orders which we already received continues, so there is no difficulty in which is posed by election. The other businesses, the other options or other opportunities which we have identified in Maharashtra also continues, while similarly some more opportunities are identified in other states also, which we are continuing to tap. So I don't think any election is going to affect the ability to raise more order book or execute the order book.
Got it. And sir, in terms of this, as in there can be some as in continuity of government as well as change of government. So anything to on that front, sir? Whether we should still continue to expect good order wins?
So it is, I think we are not linking our winnability to which government. We are linking it to the credibility and the credits of what we have already delivered so far. And I don't see that the future orders or future winnability is anyways linked to the which government is there. It is always going to be on the basis of the quality and the ability to perform.
Got it, sir. And sir, last question is on this the 6 crore expense that we talked about. Is it like one-off, or but if I look at historical, our console EBITDA tends to be slightly lower than standalone since last 3-4 quarters. So is it like 6 crore is one-off, or like we should expect subsidiaries to go to positive in coming times?
So just to give you the answer of 6 crore, majority was in Q2, although it also has little bit of, I think, 1.5 crore of Q1. So effectively, we are talking 6 crore of this half. Earlier also, we have been doing the business development activities, but this is something which is very focused. So this may continue for next 1 or 2 quarters. I would request Prashantji to further elaborate on it.
Yeah, I was coming to that. So, one technical correction. Until I think 2-3 quarters back, on the console basis and on standalone basis, we were almost similar, or on console we were doing actually a little bit better. The second part, is this 6 crore or 4 crores or 5 crores going to be constant? No, it will not. But because our plans are definitely in place for inorganic acquisitions and all that, these investments will continue. So therefore, if you are going to siphon the results between consolidated and standalone, the picture probably would be similar for some period of time to come in. And that's why when I explained, I said, looking at that way is the wrong way, because these investments are happening for a standalone company, but the vehicle is being used as a subsidiary company. Therefore, we should look at it as a consolidated number.
And I think for the benefit of all listeners, the subsidiary company is also going to be merged with the parent company. So I think it's only a matter of 1 quarter or maybe a little more that we are seeing the subsidiary separate and Ceinsys separate. The Allegro Technologies.
Kaushik. I think our US subsidiary will still be subsidiary of the parent.
Yes,
so
that's
numbers may change, but subsidiary will still be there, and console will show lesser number than the console, than the standalone in the foreseeable future until these investments start giving us results.
That's correct. I agree.
So the number will definitely change. So what you are saying as a mix, it may not be 78-11, it might be 85-5, but there will be subsidiary, there will be console, and because there is a console and investment vehicle is subsidiary, there will be reduction at a console level than the standalone. That trend will continue for nearer to medium term future.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Ankur Agarwal from Motozak LLP. Please go ahead.
Hi, sir. Sir, I wanted to understand about what kind of businesses can come out of data center vertical, because it's a very new field for me, and I just wanted to understand this holistically from your side, if you can. Thank you.
Shanji, okay. On data center, I think we explained that last time also. We have no plans of capex investment and running data center for somebody. What we are planning is to get into the designs of data center for somebody, and that's the area which we are exploring seriously. We are investing in it, and we are also looking at the space for the growth. And if you are going to ask me what kind of investing, what kind of designs and all that, so it's all 9 years, including liquid cooling and everything. So that's the area which we are thinking of going into. Yeah.
What did you say, sir? Including
liquid cooling.
Okay, all right. We are designing the complete layout of the data center.
Technology is involved. Yeah, all the areas where technology is involved is where we are trying to get into.
Understood, sir. Sir, thank you so much.
Thank you.
Thank you. The next question is from the line of Pankaj Kumar, an individual investor. Please go ahead.
Hi. My question is related to the order book. Wanted to know what is the execution period of this order of 1,210 crore?
So I can just give you a snapshot. This 1,210 crore includes majority of capex and a small portion of O&M. The capex portion, which is in the range of around 1,100 crore, 1,125 crore, is executable in the next 18 to 24 months. Different project, different timelines. And on the O&M side, there are some O&M which have already started. So the period of O&M will be between 1 year to 2 years to 5 years. So that's the kind of execution cycle.
Okay. Thanks a lot. That answers my question. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I would now like to hand the conference over to the management for their closing comments.
Sure. I think we are grateful that to all the participants who have taken so much of their time and interest to ask the questions and understand our company. Thank you all for participating in this earnings conference call. And I hope that we have been able to answer all your questions satisfactorily. If you have further questions or you would like to know more about our company, please reach out to our IR managers, Valorem Advisors. We once again thank the host, Choice Broking, to enable this facility. And we thank once again all the participants. Thank you.
Thank you. Thank you, everyone.
On behalf of Choice Equity Broking Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.